Have you ever wondered why some Singapore stocks seem to jump while others are stuck, even when the headlines say our market is doing great? Maybe you're frustrated by how hard it is to figure out which smaller, lesser-known SGX stocks are actually worth your money, especially with all the MAS million-dollar moves and policy talk flying around. If so, you're not alone. Many local investors are unsure how massive government programs or sudden market shifts affect hidden gem stocks. The good news? You don't need complicated theories or a finance degree to see through the noise. I've taken the latest market data, all the MAS updates, and the biggest financial stories, and boiled it down into 7 crucial points that will reshape how you see small and mid-cap stocks on SGX. These points are real, actionable, and designed to help you grow your wealth right here in Singapore. Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth right here in Singapore. The investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just crossed the 1 million mark for reads and 58,000 likes. I produced over 1,000 videos with more than 600,000 watch hours as of August 2025. I cover both local and global market trends. If you're serious about taking your Singaporean investment journey to the next level, you'll want to hear this. Here's what's ahead. First, I'll break down the government's $1.1 billion impact on small and mid-cap stocks. Next, we'll dive into how Singapore's export data and fast local growth are reshaping the market landscape. Third, I'll show you which types of companies, supermarkets, industrials, and property, are quietly making stealth gains. Fourth, we'll talk about how retail investors' behavior is actually pushing some stocks out of reach and what you can do about it. Fifth, you'll learn the real story behind prominent names like Sheng Siong, Valuetronics, LHN Group, ComfortDelGro, and Marco Polo Marine, including up-to-date numbers, analyst views, and what's driving sentiment now. Sixth, I'll share my personal approach to using the MAS program and market data to create a more confident Singapore portfolio. Seventh, you'll get a clear checklist for choosing growth stocks in 2025 and avoiding common mistakes many locals keep making. 1. MA's $1.1 billion program changes everything. Since July 2025, the Monetary Authority of Singapore, MAS, rolled out its $5 billion equity market development program, starting with $1.1 billion. 3 asset managers are now pumping money into stocks that used to fly under the radar. This means better research, more liquidity, and a fairer shot for small and mid-cap companies. Think of it like the government giving HDB upgraders a housing grant. Suddenly, overlooked stocks now get fresh attention and new investors. 2. Singapore's export growth backs the market rally. While global headlines worry about tariffs and slowdowns, Singapore's non-oil domestic exports jumped 13% year-on-year in June, reversing earlier dips. This tells us our local economy isn't just riding on MS policy. Real business activity is pushing up numbers. As a local investor, this should be on your radar. What kinds of companies benefit most? Look for those tied to logistics, manufacturing, and retail, since they get direct boosts from export growth. 3. The rise of defensive and high-yield stocks. Institutional buyers are shifting into defensive safe haven stocks, especially telcos, consumer staples, and property plays like Sheng Siong and LHN Group. Why? When times are uncertain, local investors prefer companies that pay regular dividends and run well-established businesses. It's like choosing reliable NTUC groceries for your family over a new startup cafe. These choices might not double overnight, but will help you build wealth steadily. For even more detailed charts, deeper dives into the data, and a full written breakdown of today's topic, make sure to check out our Substack. The link is right there in the description. 4. How retail investors move markets. Want proof that everyday Singaporeans are shaping market trends? In the first half of 2025, ETF trading records were smashed, with retail investor participation at all-time highs. Yet, retail investors as a group sold more stocks in July, even as institutional buyers started buying up local names. This push-pull means stock prices can swing more wildly, especially for small and mid-cap companies. How do you position yourself? Don't just follow the herd. Instead, understand what bigger buyers are doing. 5. The 5 companies to watch, numbers and narrative. Let's break down the key facts for our featured stocks. Sheng Siong grew revenue 7.1% and net profit 3.4%, now at 82 stores. Analyst ratings are buy, with targets at $2.20 to $2.30. Dividend forecast is 2.95%. Over 8 new locations are in play this year, making Sheng Siong a standout for defensive growth. Valuetronics reversed 6 years of declines with 3.5% revenue growth and better margins. Expansion into industrial and AI sectors bolsters its future. Buying momentum remains, with 5.5% dividend yield. LHN Group's revenue surged 29%, profits up almost 9%. Management is plotting a Collywood co-living spin-off, diversifying its property footprint. Yield estimated at 4.7%. ComfortDelGro posted higher profits, but is battling lower returns on capital and strong competition. Analyst targets at $1.73 with a 5.6% yield. Its overseas business now makes up more than half its revenue. Marco Polo Marine faces a mixed outlook. Revenue dropped 14%, profits down 3%, but cash reserves rose. It's betting big on offshore wind with a major vessel rollout in Q3. 6. Using data and amass programs to build your Singapore portfolio. How can you actually use all this information? I look for stocks where government policy lines up with business fundamentals. Sheng Siong gives steady cash returns and expansion. Valuetronics is a way to tap industrial tech without heavy risk. LHN Group can ride the property trends plus new shared housing ideas. A bit like investing in a mix of HDB and trendy condos. ComfortDelGro is my stable uncle pick, great for CPF income, while Marco Polo Marine remains a high-risk, high-potential play. Want your CPF and SRS investments to work harder? Start by filtering for companies that received recent analyst upgrades, are expanding their core business, and pay out dividends above 2.5%. MAS's scheme means many small caps now have better research and clearer stories. Consider adding some to your watch list. 7. Your 2025 checklist, picking winners and avoiding pitfalls. Here's my approach. First, check the company's recent growth rate. Anything above 5% signals real momentum. Second, look for analyst ratings and price targets. Third, compare dividend yields. Over 3% is a healthy signal for defensive plays. Fourth, watch for active expansion, new stores, spin-offs, or big projects. Fifth, scan for institutional buying or insider transactions. Sixth, avoid companies with shrinking profit margins or vague future plans. Seventh, cross-reference your picks with mass-influence names for extra liquidity and support. Let me ask you, are you still picking stocks based only on name recognition or outdated forum tips? Or are you ready to tap into verified data, fresh research, and real market moves with MAS at your back? Iggy's personal take. Here's my honest view. Policy moves like MAS's equity injection change the whole playing field. I believe Singapore investors have a rare chance right now as government programs, market data, and export-driven growth all align. My advice? Build a portfolio that blends defensive, high-yield stocks with carefully chosen growth names. Don't overlook small and mid caps, especially those now getting fresh attention and research. Use CPF, SRS, or even regular savings to build positions gradually, focusing on consistency and resilience, not chasing overnight riches. The Singapore landscape rewards steadiness and good timing more than wild bets. If you're using CPF, remember the rules. Focus on income-generating stocks, balance high-risk picks with steady anchors, and keep close tabs on policy and macro shifts. After following hundreds of Singapore stocks, I can say use simple filters, rely on clear research, and avoid jumping on hype trains. Outro. So, we've broken down the SGX small and mid-cap story after the MAS 1.1B impact, and I've given you my personal take on how to take action in Singapore. If you found this video helpful and want to seriously level up your investing game, please give it a like, share it with your friends, and subscribe to the Investing Iguana channel so you don't miss our next insights. And for those who want to be truly ahead, our premium members gain exclusive early access to all our videos, often a full week before anyone else sees them. This means you get Iggy's detailed analyses and urgent insights on major market moves directly to your inbox, giving you a significant head start. It's just $3 a month, about the price of a cup of coffee. Think of it as your consistent daily dose of financial fuel for smarter decisions, delivered before everyone else. Ready to join the inner circle and get that early edge? Just click the link in the description below to become a premium member today.